Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the CEO of CORZ Scientific, Adam Sullivan, to provide an update on their recent HPC endeavors and Analyst Investor Day that was held in Denton, Texas. Now we've got a lot to go through in today's presentation, but before we do, you know the drill. Smash the like button, you guys. If you're not already subscribed to the channel, McNallie Money, feel free to join. And let us know in the comments section below if you're currently holding shares of CORZ Scientific, your outlook on the HPC space overall, and your thoughts for the industry in the back half of 2024. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got the CEO of CORZ Scientific back on the channel, Adam Sullivan, to provide a recap and an update on last week's Investor Day presentation held in Denton, Texas, and the exciting developments in the HPC world. So Adam, thanks so much for making the time today. Really looking forward to this one.
Yeah, looking forward to it as well. And I appreciate both of you guys coming out to our facility. I know coming across the pond to Denton, Texas is not an easy trip. So I appreciate you coming out.
Yeah, Anthony was a trooper for that one. Now, Anthony, I wanted to get your first impression. This was actually our first Bitcoin mine either one of us have ever been to of any scale. So we pulled up to the facility. What was your first impression of Denton?
Again, the pictures don't do these sites any justice. It's just like the sheer size. Bear in mind, we did the Corsicana site the day after, but the size of those buildings there, and and actually, what struck me was it wasn't just about being there. It was about the staff of CORZ Scientific, explaining every bit of detail to us, so that if you've never been to a site before, you understood all the nuances that go on within the site, the repair shop, the software that they use. So it was a really, from start to finish, from the moment I got off the plane in Dallas to the moment I got back on that plane on Friday, everything went absolutely seamless. There wasn't anything that I could fault, and we had two fantastic visits to two sites, both for different reasons, and we'll come on to that during the conversation there. But it was the first Bitcoin mining site I've been to, and I've been talking about Bitcoin mining now for the best part of 4 years. So it's actually nice to sort of tick that little box, as I've seen a miner and held a miner as well. So yeah, no, really enjoyed the day and everything about it. No, really good.
Yeah, it certainly was. What was interesting about this tour, and kudos to you guys, Adam, is they actually set up stations so we could see the repair lab. Then they explained the proprietary software, how the buildings worked. We did get to hold a mining rig, which to my surprise was quite a bit heavier than I thought. But we'll get into all of that in today's presentation. So Adam, we wanted to ask you first and foremost, obviously we understand what's so unique and special having been to Denton, but for people who maybe haven't had that experience, why is this such a phenomenal site and so special in the industry right now?
Yeah, so we started building facilities for Bitcoin mining back in 2017, and our facilities have evolved over time. We've had a lot of learnings over the course of the past 7 years, whether it be for heat mitigation, whether it be for the prevailing weather data, whether that be wind speeds, whether that be humidity. And Denton really showcases our fourth generation design. And so, yes, it is the most advanced forced air cooled facility in the industry, but also it's still a powered shell structure. So it looks very similar to a traditional data center from that perspective as well. And so we've actually been able to construct these buildings that can run up to 110 degree heat. And so Denton is just this exceptional kind of, I would say, trophy in the industry of how far we've come over the course of the past 7 years of really building industrial, institutional scale Bitcoin mines. And so I think that's right. Denton for us, it's a really special site.
One of the areas that Brian's just related to there when we arrived in the repair center was the discussion about your software, the miner software. Can you tell us about, how does that give you guys a competitive advantage in terms of your peer miners?
Yeah, so we actually, because we built our own software stack, we actually were able to incorporate all 3 levels that are mandatory to run a Bitcoin mining facility. So we have our energy management system, we have our fleet management system, and we have our firmware. and they're all built into a single system. And so they're all interconnected. And so when we're taking in all of these, so we actually build our own hardware sensors as well that we put throughout the facility. But when we're able to intake all of these different variables and we're able to put them against all of the different variables of where that machine is on a shelf, where it's exactly located, it actually gives us a lot of insight into how we can operate that facility in a more efficient manner. And so Minder provides us data going back on over 700,000 machines, dating back 7 years. And that is a data set in this industry that no one even come close to having. And so when we plug in a new machine, we know exactly how it's going to run. We know exactly what facility we should be putting it in. And we're able to actually immediately intake that machine from the moment it arrives at our facility and actually track it throughout its entire life cycle. So we know how many times it's been repaired, how much downtime it has, how it's operating compared to spec, how it operates under different firmware settings. We track all of that through its entire life cycle, and that helps us manage our entire inventory of machines. So at any given point, if we want to remove 5,000 machines or 10,000 machines to replace, we can pick and choose the exact machines that are either underperformers or are not fit for our current mix of power contracts.
Does that give you a sort of like having that amount of data? I mean, you can probably change the sort of like the level of power in terms of underclocking or overclocking the machine to work out the ultimate return for you guys. Is that how you look at it that way?
Yeah. So our base essentially mode is boost mode. We have boost mode, we have low power mode, and we have ultra low power mode. And so this is actually something that we talked a bit about in the investor day, but in some of our facilities, we're actually double stacking machines, essentially putting two machines next to each other, running them in ultra low power mode to actually bring more terahash online at a newer generation facility or newer generation machine efficiency. And so that's actually provided us a really interesting opportunity where we're able to drop the efficiency of our existing machine fleet just by buying new machines and not actually losing a significant amount of terahash, but able to extend that life cycle of machine from 3 years or 4 years in profitability to really 5 or potentially 6.
I remember talking about that at the investor day and on our last call as well, Adam, but very interesting stuff you're doing there to really extend the life of a lot of these rigs, which, as we know, is a big portion of the CapEx investment in Bitcoin mining. Now, another portion of the tour, and Anthony, you mentioned the staff at the intro there. I thought the staff was extremely accommodating and most notably extremely knowledgeable about this space. And nowhere was that more evident than the repair lab. That was actually our first stop for our group, Adam. Can you talk about what that means from an efficiency standpoint, in terms of an uptime standpoint, and having that amount of expertise, the talent, and the facility to take care of these repairs on site?
Yeah, so across our facilities, we have repair centers in our facility. If you put our repair center team up against any third-party repair team in the entire United States and possibly even the world, we would be one of the largest repair centers. And so we're able to do everything from your basic repairs, like repairing fans exactly or on the shelves without having to remove the machine to reduce the downtime. But we're also able to do chip level repairs. And so that was a highlight of the investor day is people actually got to see the actual chip repair team in process of actually testing chips on the boards to determine, which chips need to be replaced. And that's something that other firms don't have. And so we're able to bring hash rate back online so much more quickly than the rest of the industry, which is the reason why our efficiency is so strong. It's because the moment a machine goes down, we know the exact reason why it went down. We can check, determine which chip it is, replace the chip, and get those machines back on the shelf before most people would have packed that machine to send it off to a third-party repair center. And so it's adding so much more uptime. And that's a huge competitive advantage for us because we're able to do that at all of our facilities in a way that really no one else can compete with us on from a repairs perspective.
No, I mean, it was extraordinary. And actually looking at the software that tells you how many repairs per quarter you're managing now, I think it was around about 10,500 in Q1 and you're already up to 10,500 in Q2. So there's a lot of, people don't realize that. They think these machines, just plug them in and they'll be okay for 3 or 4 years, but they need looking after. There's fans, there's boards that need to be replaced. There was even a small amount of things that you actually outsourced to a third party to help you, but it wasn't a very large percentage there. But it was really interesting to see that process. And as Bryce said, I was actually, I probably asked more questions than anybody else in the repair shop. In fact, probably during the day, because I was really interested in the Bitcoin mining side. But if we pivot just across now to sort of like to the HPC, which predominantly was the emphasis for many of the people that were there on Investor Day. Obviously, you highlighted, the fantastic contract you've recently agreed with CoreWeave, the 200 megawatts, and then you went on to explain that you've got now a further 300 megawatts of power available for further HPC. Can you sort of explain what the process would look like, so that retail investors can understand that, please?
Yeah, so for us, we're currently in discussions on the next 300 megawatts of HPC. Obviously, it's an incredibly interesting opportunity from a cash flows perspective. It highlights the talent we have in the data center space as well, given the fact that these technology companies are coming to us because of our experience. And it actually, I want to touch on this though first. It really fortifies our Bitcoin mining business. So we're taking many of our higher cost sites and actually transferring those to HPC. And so it's making our Bitcoin mining business even stronger. And so as we continue to build out and search out new sites for Bitcoin mining, we're actually going to be able to continue to pull in our margins and actually make a stronger Bitcoin mining business out of it. And so I think that's something that we really didn't get a chance to highlight during the Investor Day, but it's something that I want to make sure people understood. And so as we migrate the next 300 megawatts, which we touched on earlier, is actually 420 because it requires some additional ancillary power to manage the PUE. But as we migrate that next 300 megawatts, if you think back to our Q1 earnings call, we laid out a lot of details related to the HPC strategy, kind of timelines, all of these different aspects. We're still looking at, for the next 300, potentially 3 years to 4 years to get all of those facilities up and operational. But this will actually cover a very significant amount of power, and it'll take us into the top 10 data center companies in the United States. That's something that being able to do that within 3 years, that is a tough putt for most companies to say. But what we're seeing right now is insatiable demand. The initial contract that we signed with CoreWeave, exceptional contract that we're really excited about, and we're using it as a baseline for every conversation we're having now in that next 300, saying, this is what we signed. This is first. This is exactly what we're looking for. And so we've been very fortunate to be a first mover in this side, especially from the mining side, to sign what we've heard from multiple parties in the data center industry to be an industry-shaking contract. I think it took everyone by surprise in the traditional data center industry. And that's what we like to do at Core. We like to surprise and shake up traditional industries.
I think what took a lot of people by surprise in Investor Day was the amount of interest in that first 200 megawatts. I mean, you might think there's 4 or 5 players, but you said there was not close to 50 expressions of interest. Now, maybe not they all couldn't fit the criteria once the criteria was laid out, but that's a significant amount of interest for power. And now you're saying there's an extra 300 megawatts or 420 when you include ancillary power. I mean, is it insurmountable that CoreWeave could apply for even more? Because power in the future is going to be the challenge for everybody, no matter whether you're Bitcoin mining, whether you're data centers, HPC, AI, whichever. All the power needs. That's going to be the I would say like the bottleneck going forward. And I'm not suggesting you announce today, but could they possibly bid for the next stage as well?
Yeah, so actually in the press release related to CoreWeave, we mentioned that we signed an option agreement with them as well for additional meaningful megawatts. So absolutely, I mean they're a large consumer in the data center world. They've got to be the fastest growing data center consumer by megawatts in the entire world today, and so obviously they're in a very power hungry mode. But there's a lot of other companies too that are in very similar posture in terms of how aggressive they are in terms of trying to bring new megawatts online.
Yeah.
Now, Adam, one of the questions that came up from a number of the analysts there from Wall Street was the optics of this deal. And you're totally right. This was an industry shaking deal. It really galvanized the whole Bitcoin mining sector. And a lot of the other CEOs, including Jason from Riot, who's focused on pure play Bitcoin mining, he actually commended you for this deal and said, this is really something to behold here. Now, one question I heard a few times was, is this a unique situation or deal, or do you feel like you'll be able to negotiate similar, for example, 12-year length, CapEx up front? This was very favorable for Core in a number of ways. Do you expect additional deals to look and feel the same way?
Yeah, I mean, in the traditional data center world, 12 years is that's kind of middle of the road in terms of length, right? So traditional data center contracts, 10 to 15 years, multiple renewal periods. So what we signed was really straight down the fairway from a traditional data center perspective. Now, what was most intriguing was essentially the CapEx that we have to pay back is only a small portion of the total CapEx that is being paid for by CoreWeave. Now, that is what completely rattled the industry. Everyone was like, we've never seen this before. We can't believe this actually happened. And I think one of the big takeaways, and I agree, the Wall Street research analysts were saying either this is too good to be true or you just signed the greatest deal in data center history. And they're like, after we went to Investor Day, we realized you signed the greatest deal in data center history. So that was obviously, that was great to hear from their side. But that's what we're looking at signing for the foreseeable future. That type of structure, because maybe it looks different 3 years, 4 years, 5 years from now, as we're continuing to build and find new facilities to build out on the HPC side. But today, in the market we're at, this is the exact type of contract that we're looking to sign.
And just a quick add-on, sorry, Anthony. One thing that also came up that I was unaware of, Adam, is you said at the end of that contract, you guys will actually have the rights to purchase that facility and infrastructure back at a nominal rate. So can you just fill that one out for people watching from home?
Yeah, so at the end of the contract, we'll be able to buy back any of the equipment that we didn't pay for or pay back to or credit against CoreWeave's contract. We'll be able to buy that at a de minimis amount. So, let's say, for instance, like $1. It would be a very small dollar amount to actually buy back all of that other equipment.
Yeah. Obviously, the sort of the markets looked intensely now at the mining companies that got the HPC associated, as well as the Bitcoin mining. But the HPC seems to have taken a lot of interest. From an institutional standpoint, and bear in mind, there has been challenges with a lot of the mining companies, getting that institutional support there. I mean, the retail investors have come out and, they've been flag waving for a number of years now. They like this space, they like the volatility, but institutional investors, apart from those that maybe, from an index perspective, they have to buy the shares in the company. We've not seen as many of those come forward as we'd like, and so now that with the HPC side, are you seeing any different sort of conversations with these types of institutions, or do you feel it was still too early to see the model? And I think you even you iterated at the Investor Day that the Bitcoin mining side will start leveling off, and therefore become more of a known than sort of at the moment. It's still that very much an unknown. What's going to happen tomorrow, the next week, next year? Nobody can tell at the moment.
Yeah. So I'll start with the Bitcoin mining side before we jump into the investor side. But the Bitcoin mining side, 4 years from now, 5 years from now, this industry is going to look completely different. There's going to be all types of products to hedge out not only your CapEx, but also your forward production. All of these things are going to make this industry a much more stable and it's going to look much more like a commodity type business. But from an institutional perspective, our investor base since our Q1 earnings call has completely changed. That was us setting the groundwork for the announcement of the CoreWeave deal. And from the moment we had that Q1 earnings call, the investors that were reaching out to us completely changed. It moved from much more focused distressed credit funds, since we had just emerged from a restructuring process, it immediately flipped to very large, well-capitalized, multi-billion, long onlys, hedge funds, all of the people that are actually sitting when you open up, a traditional company that's on the S&P 500, and you go, oh yeah, all these companies look this investor base looks the same. Those are the people who started calling us. And then after we announced the CoreWeave deal, it felt like, the switch had been flipped permanently at that point, because suddenly all of our meetings were with those types of institutions. The institutional demand is exceptionally high. They've been able to take positions in our company. Given our trading volume has gone up significantly over the course of the past 6 to 8 weeks. And so from our perspective, it was a great and refreshing change. I mean, this is probably one of the greatest recoveries from a restructuring process that has been seen in the past 10 years. And so from where we stood, 5 months ago when we emerged to today, our investor base has changed, the thesis has changed around the business, and we've been able to actually attract, large institutions who are going to be long-term holders of our equity.
So certainly the thing I got from the conversations post visiting that day with when you're on a bus with 40 analysts from these big firms, the discussion was certainly very topical.
I was going to say, Adam, they were buzzing on the bus, and it really goes back to the culture and the staff and yourself that you've all managed to have this turnaround, because as you say, this is really one to watch over the past 2 years, really since the emergence of that Chapter 11. Now, another key catalyst that a lot of people are watching right now is really the warrant situation. So we're going to put up a slide here. This was part of the Investor Day presentation as well. So you guys can visualize this as Adam walks through, but we've now entered that mandatory 20-day period where we need to see the volume weighted average surpass each one of these tranche levels. Can you talk through where we're at in that process, Adam, and how this warrant situation will play out or could play out?
Yeah, so I think there's really three instruments that we should talk about. So there's the tranche 1 warrant, there's the tranche 2 warrant, and there's the convertible note. They all kind of play together, and so it's actually topical to cover all three. So the tranche 1 warrant is a cash exercise warrant at $6.81. That means if you own a tranche 1 warrant, you can choose to convert that into a common share by paying $6.81. Now, there's no VWAP mechanism or volume weighted average price on that tranche 1 warrant. The tranche 2 warrant is at $8.72. At $8.72, once we reach that on a VWAP basis for 20 consecutive days, that automatically becomes a share in Core Scientific. So as long as we continue to trade above $8.72 on a VWAP basis, you will own a share at the end of those 20 days. As of Friday's close, we were 3 days into those 20 consecutive days. Now, another interesting note is our convertible note. And so our convertible note represents $260 million in debt, and that has a similar VWAP mechanism to the tranche 2 warrant. And so the convertible note is, as of Friday's close, is 7 days into the 20 consecutive trading days. And so if we make it through the entirety of the 20 consecutive days, that $260 million in debt will be equitized at that point automatically. And so it'll actually reduce our debt from about $580 million today by $260 million, so just above $300 million in total debt. Which at that point, all of our debt is callable, and we'll have an opportunity to actually perform a balance sheet cleanup if we so choose.
I mean, that's a good point. I mean, two of those are obviously effectively controllable. The one that isn't is the tranche 1 warrant, because you're then reliant on people exercising the warrant, and they have, I'm assuming, probably the best part of 2.5 years to do that. Is that correct at the moment? So, is there anything that would get them to actually exercise it sooner than later, or is it something that the company planned for that 3-year period? And obviously the tranche 2 warrant, the Z warrant, was given like a 5-year period, initially. And I'll ask a follow-up question to this in a second.
Yeah, so in the tranche 1 warrant, there is a price of common equity at which there is very limited option value in that tranche one warrant, and you would actually lose more if the stock traded down than if the stock traded up. So you essentially have convexity to the downside at a certain point. And so that's the price at which people would begin to exercise that tranche one warrant prior to it was a total of 3 years, but since our emergence, so about 2.5 years left on that tranche one warrant.
And because these dates, the 3 and the 5 year dates, were so far in the future, and potentially, everything being equal, things could happen a lot quicker than expected. What does that do to your your strategy going forward in terms of, you were obviously planning to do this at some point in the future, but maybe not necessarily as quickly as things have turned out. I mean, the fact that the fact that the announcement of the HPC has given the share price and the warrant prices, significant boost in the last couple of months. I don't think any share price in the mining space has performed as well as yours, certainly this year. I mean, yes, year in 2023, you'd reached the lows that any share price could get to, but the recovery in 2023 was remarkable. The continued recovery of that share price in 2024 has not been seen by another share this year, far outperforming the price of Bitcoin. So does that give you an opportunity to do things obviously far quicker than expected, or give you, help you with the strategy going forward in terms of Bitcoin mining?
Yeah, absolutely. I mean, if we're able to get the tranche one warrants exercised in its entirety and the convertible notes convert, that means we would have zero debt and we'd have about 400 million in cash on the balance sheet. And so it would obviously be incredibly supportive to our growth, and we'd be able to accelerate that entire process. And so, the CoreWeave deal is a great example, though, of how we've been able to be very flexible and work around a lot of the issues that we were saddled with coming out of a restructuring process. But I mean, that deal highlighted that we have the ability to still be extraordinarily aggressive in our build outs and our growth plans. And so the HPC business was fantastic, and it will help lower our cost of debt in the future if we choose to take on debt, because just from that first deal, it's over about 200 million in free cash flow on a run rate basis per year. And that provides incredible stability to the market. There's no, CapEx refresh cycle for machines on that side of the house. And so it allows us to really focus on continuing to grow and refresh our machines in the Bitcoin mining side. And if we're able to execute those, or if we're able to trigger those tranche one warrants and we get people to exercise and the convertible notes exercise, we'll be in an incredibly strong position to grow even more quickly.
Yeah, really, really exciting time. And last interview, or maybe 2 interviews ago, Adam, you explained that there's actually companies out there that will go out and buy these warrants up, trade the arbitrage on that. So I thought that was interesting as well. It's not all necessarily people out there just waiting to convert. There are companies that aggressively, proactively go after this. The other thing I wanted to just shout out here as kind of a final point, Adam, and then I'll let you have some closing thoughts. For the Bitcoin buffs watching this video, how will this affect your Bitcoin HODL strategy? Because I know right now one of the limitations or restrictions as the emergent of Chapter 11 is you have to sell that Bitcoin within 10 days. Can you speak to that?
Yeah, once we're able to clear, there's 3 instruments that we need to clear to remove that covenant. So it's a convertible note, and then it's our 2 term loans. So $61 million term loan and $150 million term loan. And so once we're able to clear that debt, we've said this on Q1 earnings call, we said this during our investor day, but our plans are to put Bitcoin on our balance sheet. That's something that we do look forward to in the future. This is a business that was built by Bitcoin, right? Our entire business for the past 7 years has been mainly focused on Bitcoin outside of running GPUs for a number of different customers. And so Bitcoin is in our blood. We understand it, and we think continued exposure to the Bitcoin markets is something that will be valuable for corporations on a go-forward basis.
For sure. Yeah, and I know a lot of people watching are probably happy to hear that. So, Adam, we've covered a lot, not only in the tour, but now in today's follow-up. We've got some great footage to go along with it. I'll pass it back to you for any closing thoughts or upcoming catalysts. But again, just wanted to express our appreciation, not only Anthony and myself, but our entire subscriber base for getting this backstage look at this world-class facility.
Yeah, I appreciate both of you guys coming out to our facility. I thought the investor day was great. If people haven't seen it, we have that up online on our investor page at corescientific.com. But we're at a really interesting inflection point for Core. We obviously signed our first 200 megawatts that provide an incredible support to the company for the next 12 years. Looking at greater than potentially 200 million in run rate free cash flow on a go forward basis. And so it's an incredible opportunity for us to continue to execute on another 300 megawatts in the pipeline today. And we're aggressively pursuing additional sites and additional opportunities, both on the Bitcoin mining side and on the HPC side. And so we look forward to strengthening our Bitcoin mining business via this shift to HPC. And we think there's incredible things in the future for Core Scientific.
Well, we'll be waiting eagerly with eyes and ears open. And Adam, you mentioned earlier your facility can operate up to 110 degrees. Unfortunately, I can't. So next time we come down for a follow-up, we'll come down in the wintertime and make sure we can check in for everybody. But we appreciate everything you're doing here. Great job really setting the benchmark for this industry with that world-class deal as you described. And we look forward to continued updates. You guys, if you're still watching, smash the like button, subscribe to the channel. And if you have any questions for Adam and the rest of the team that we didn't address in today's video, throw them in the comment section. We'll make sure to add them to next list for the interview. Adam, thanks so much. We'll see you guys tomorrow.